Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, the 11th of July, 2017, and we're about 2:20 p.m. Central Daylight Time. All right, the grain markets, they had profit-taking set into them. In fact, you can see you got down to 10.22 in the beans, you got down to 40 3/4 in the sep wheat, corn even down to 94.5, and from there the buyers came rolling back in, about unchanged at the end of the day on the corn, wheat up 3, beans up 4. Weather markets don't die easy, and that's what you're seeing. In addition, tomorrow you get at 11 in the morning the USDA supply demand report. Now they're going to take that number, they're going to crunch the acreage that we just got, they're going to add into it this hot weather and the drought conditions, and it could be fireworks in the afternoon once they get that, actually right after 11 o'clock. Be ready for that. They drove down the cotton one more time, but a strong settlement there. Sugar has literally fallen apart. It certainly looks like it's made an important top against 14.37, and the market has just been headed lower. The dollar index down today. It's bounced a little off its low, but basically a down day there. And most of the day, the stocks have been near unchanged to lower, and they've come back in the afternoon. Keep in the back of your mind also that Fed Chair Yellen speaks tomorrow. I believe it's 9 in the morning in front of the House tomorrow at one of their committees, and we will see that on TV, and they'll be drilling her about interest rates. So let's take a look at the charts and get a feel for what we have. Right now on the weekly chart, you finish off at 10.25 1/4. The whole high is 10.27 3/4. So market's given up nothing on the weekly chart. As you can see where you settled today, 10.43 1/4. You're right on up to a new high close in the soybeans. When you come to the daily bar chart, you've gone up from now 9.07, $1.40 to 10.47, and as you keep looking at the weather, that will determine these next moves. You can see, by the way, today, look at the size of this move. You attempted to fill the gap, did not do it. So this gap right in here, you had a first gap here. That's the breakaway. This is called the runaway. You haven't been able to fill it at this point in time. So let's see what happens if the market can keep going from there. When I look at the swing line, you now can remove your arrow that was pointing up right where I'm pointing. You got one here and a new one up here. So if 10.22 1/4 is taken out, be nervous. That would be a sign that the chart pattern of higher highs, higher lows is breaking. As I told you, expect to see the 18-day and the 100-day make a run at each other here, and the way the math is going, they're getting closer and closer. They're now 10 cents apart, and they're moving at the clip right now of about 6 cents each day. So it's getting to be exciting. By Friday, you'll probably be right there. When you look at the Bollinger Bands, the market came back, settled 43 1/4, and believe it or not, that settlement's going to give it 6 days in a row over the upper Bollinger Band. Yes, it's only by a half a cent, but it's there. So, as I said, could be 7, but you're in borrowed territory. Spent the whole day under it and then came back. Meal market came back too. The market, wait a minute, that was the beans. Let's go to the meal. The meal market did the same thing. It was down and it came back, so you're going into 7. It's a weather market situation, and that is why one, by the way, never goes short at an upper Bollinger Band or buys a lower one. It's not the rule. The rule is so different. It's one thing to take profit when you first hit it, and if you have a trailing stop on your second unit, you're letting the market run if it can. What's unusual in this case is this whole thing is happening without an embedded reading out of the momentum of the slow stochastic, but weather markets are notorious. They just go. Soybean oil is the weakest part of the market. That doesn't mean it's not good. The oil share from palm oil and so on, in terms of the fundamentals, gaining momentum. The trend is up, but again, overbought. In fact, in all the grains, you're not embedded, you're overbought, but you're in a weather situation. They drop it, and what did I say yesterday? They don't ring a bell. They just drop the market on you, and then those who had the guts stepped in and 20 cents up by the close. This is very typical of weather markets. Look at the corn. Normally, corn's a very tame market. You got a 10-cent range today. I remember when we get 10-cent ranges off of key USDA reports. That's not the case in weather, though. Here the market dropped back, and now you've got what's called what? An outside day down. I know that sounds crazy, but you closed lower. So you took out the highs and lows. You closed lower on the day than you did yesterday. In order to create a bear trap, you've got to take out today's highs. Even if you do, would you buy into a Bollinger Band? Not me. I'm sidelined in the grains, and I'm content doing that. In the wheat market, overbought, definitely an uptrend, higher lows, higher highs. And this is the leadership. And now it's not Chicago wheat that's the leader. It's Minneapolis wheat. Then you get KC wheat. Chicago's being pulled with all that. In the sugar market, all we were looking for was a challenge of the upper Bollinger Band, and now you've got your pullback. You're very much caught in the top black lines and bottom lines. Why? Bollinger Bands are an algorithm designed to keep the market trading within them. We had this reaction from the lower band to the upper band, and now we've pulled right back into the center. No trend because you got a higher high and a lower low. The bias today down because you closed under the 18-day average and momentum is down. In the coffee market, you today had a reversal day. So you got lower highs, lower lows, but you're over the 18-day average. Momentum-wise, you are in overbought territory. In the cocoa market, you've broken enough now. Take out 1864, so you have a higher high. Market failed at the 100-day and the 18-day average when you think about it. If it breaks from here in an oversold condition, I'd be looking for some good support at 17.99. The problem they're having in the cocoa is there's a lot of product in Cameroon. It's not necessarily the best grade of the cocoa. It's backed up, and this is what you're seeing in the marketplace at this point. In the cotton market, will the cotton market be able to make something out of this? Remember, this is a market that has taken it on the chin. It dropped approximately 10 cents, and now it's getting its legs, but it has not turned the trend. In fact, doesn't have a trend. You have a higher high and a lower low. Today they tried to take the market under this low of 66.55, couldn't do it. A good sign would be closing over the 18-day average of closes, let alone getting over 68.92. But the resistance probably going to be that 68.01 in the morning. In the cattle market, momentum is up. Today, you confirmed you're back into an uptrend, higher lows, higher highs. Be a bit careful here. 116.52 is what the market should run into resistance at. That's the upper Bollinger Band with support at 114.50. I think the pros will buy this market in that 114.50 and risk under yesterday's low of 113.75. I see the same pattern developed in the August feeder cattle. Straight on up here, higher lows, higher highs. Question is, can it get to 149.25? Support 145.70 in that market. And the hog market's got a trend that is down because the swing line's got lower highs, lower lows. Momentum basically pointing down. But you're over the 18-day average. All the parts of the puzzle aren't there, so the market's a big nothing, as I like to call it. I want to talk to you about Modern Trader Magazine, and they have a whole new look. This is their index page. You haven't seen that before. And they're covering more than they ever did. Whether you trade ETFs, derivatives, you could be a stock trader. They're going to cover individual stocks in detail now in everything that they're doing. They've broken their sections down. There's more meat in it than there's ever been before. It's rather exciting reading. Now, if you go to their website and you try to buy it, you're going to pay about $79 for a year's subscription. Through us, and we work with them, totally free. This is what the front page looks like. This is our ROEN. This is spin-offs that deals with it, cycles. So it's not all futures. It's a little bit of everything, folks. Algo trading, how to work with that. And then, of course, the parts I love, the Sidewinder trading method, all these different methods that I think you'll find a really good, how do I put it, a tutorial for you. And then daily, you get Market Focus with the short stories of the day, because the magazine only comes out once a month, and we're ready to send it. Call us. You can go to our website. You'll see a carousel of free offers. Click right up here. The forms will appear if you're watching me on YouTube, and underneath us on many websites, it says, click here for Ira's free offers. Let us put this in your hand. You will love it once you get it. I'm Ira Epstein. Have a good day.